Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at CRDO, or Credo Technology Group Holding Limited. CRDO is a provider of high-performance serial connectivity solutions for the hyperscale data center, 5G carrier, enterprise networking, artificial intelligence, and high-performance computing markets. Here's the barchart.com technical opinion rating for CRDO. The bar chart rating is a 100% buy, with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, the stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that CRDO is well above the moving average line, so the monthly trend in CRDO is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started, so the daily trend in CRDO is up. Now we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. CRDO is below the upper Keltner channel line, so CRDO is inside the buy zone. Since the trend is up, we want to buy a call. CRDO has 6 option chains to choose from. We're going to use the February 21 chain. Right now, the Feb 21 options have 32 days to expiration. Here's most of the CRDO option chain for February 21. CRDO closed at 80.02, that's $80.02 on Friday. That means any calls on the list from 15 to 80 are in the money, even though the 80 is only in the money by 2 cents. Let's take a look at the profit potential for purchasing the 80 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 80 call is 650 to 690. We tried to enter at the midpoint, so we'll use 670 as our buy price. We can see that if the CRDO stock price is flat at 80.02 at option expiration, the 80 call will lose 99.7% of its value. Ouch, this is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 65 strike call to see if it qualifies for the 1% rule. Here is the call option calculator picture for the 65 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the CRDO stock price is up 1%, the 65 call will lose 41.9% of its value. We want that to be break even or better, so the 65 call does not meet our requirements. Let's see if the 50 call will work. The bid-ask spread for the 50 call is 29.30 to 31.80. We try to enter near the midpoint, so we'll use 30.55 as our buy price. The 50 call works. If the CRDO stock price is up 1%, the CRDO Feb 21 50 call will make a 0.9% or $27 profit. That's better than break even, so the 50 call is the one we'll buy. The call option purchase calculator also shows that if the CRDO stock price increases by 2.5%, the 50 call will make a 4.8% or $147 profit. If the CRDO stock price increases by 5%, the 50 call will make an 11.4% or $347 profit. If the CRDO stock price increases by 7.5%, the 50 call will make a 17.9% or $547 profit. The 10% and plus 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the CRDO stock price does not make the expected move up and remains flat at expiration, the 50 call would only lose minus 1.7% or minus $53 compared to the minus 99.7% or minus $668 loss for the 50 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the CRDO Feb 21 65 strike call and sell to open the Feb 21 75 strike call. So it's buying 65, selling Feb 1 75. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 65 call for $16.60 and sell the 75 call for $9.35. So the entry price or debit cost for the spread is $725. The call option spread analysis calculator picture shows that the spread will make a 37.9% or $275 profit if the CRDO stock price declines by 5%, remains flat, or increases in price when the options expire. If CRDO is down 7.5% at expiration, the trade will make 24.4% or $177. Creating the debit spread will allow us to collect a $935 cash credit to our brokerage account for the sale of the 75 call. As we said on the previous slide, this reduces the cost of entering the spread to $725. Here's a note regarding earnings reports. The next CRDO earnings report is scheduled for Feb 25. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the CRDO Feb 21 expiration 50 strike call for $30.55. We also reviewed the spread. The spread said to buy to open the CRDO Feb 21 65 strike call and sell to open the Feb 21 75 strike call at a debit of $725. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.